Hello, investors. Today I am bringing you a very exciting opportunity. As most of you will know, I like to identify value stocks, and my criteria for selecting value stocks is based on certain qualities that we require in order to feel comfortable about investing, particularly in today's market where there is a lot of uncertainty and risk. Just because there is uncertainty and risk doesn't mean to say you should be hiding under your covers. You should actually be looking for the opportunities that exist in the market, particularly the overlooked opportunities. When we have a lot of volatility in the market, it's impossible for all the players in the market to be as efficient as possible with so much going on. And this creates the opportunities for you to find great investments. So let's get stuck into it. Let's look at the reasons why we want to pick certain stocks and why we're talking about this stock, Evolution Gaming Corporation. So first of all, who are Evolution Gaming Corporation? They're essentially the game makers behind digital online casinos and even for live casinos. You can see they're partnered with the biggest players in the market, and they have a massive dominance over the sector as a whole. So that's a huge benefit. As we see more and more services becoming digitalized, lifestyles becoming digitalized, and unfortunately living in a digital era, we see that a lot of people opt for these options. Evolution has become the global leader in live casino B2B software providers. They hold over 60% of the market share, and they generate 49% revenue compound annual growth since 2015. They have rapid global expansion, and they really have a stronghold over the market as a whole. In terms of their financials, they are very strong. You'll see that they have almost $1 billion in cash, 958 million in cash versus 93 million in debt, which is a very strong free cash flow, which in today's market is very hard to come by. Their price to earnings ratio is around 10 times, and their price to free cash flow is around 22 times, which is extremely cheap, especially when you compare it against their peers in the market. They even pay a dividend of 4.6% because obviously they have a lot of cash and they're basically giving that back to investors. They also are making their own share buyback programs, and the CEO and the found partners are buying considerable amounts of stock at today's prices. We can see here with a price earnings ratio of 10.8 times, it is phenomenally cheap. If you look at the S&P 500 as an example, today that's trading around 30 times price to earnings ratio. So we're looking at a third of the average value of the overall S&P 500. What's even better about this is that it has a gross margin of 100% with a net profit margin of 55%. That is a massive moat for any investment that you can make into any company. That's exactly what we want to look for, which gives them a lot of room. Even if their markets were to have problems, they'd still maintain a very large profit and payout ratio. And this allows them to be very consistent with their dividend, currently at 4.3%. We can see that based on the current share price, the stock is currently trading about 50% less than its fair value. So we could easily see a potential 100% gain. I wouldn't say easily, but we can see a potential for 100% gain. So that means that as a short-term investment, it has a lot of upside. But even if you were to hold it longer term, even if you look, let's say 5 years, if it took 5 years to double in price, that's still 20% annualized performance, not including the dividend that it pays. Obviously, everything is relative. So we want to look at what its peers, what the other people in the market, its competitors are doing, even though it's the most dominant player in this market with a 60% hold on the market. It's actually one of the cheapest from a price earnings ratio, with a fair ratio probably being more like 20 times, a peer average of around 20 times earnings. The company has a massive $1.23 billion in free cash flow. It is an absolute powerhouse. If we look as well against assets and liabilities, it's also extremely strong. As you can see here, current assets around 2.24 billion against 1.2 billion in liabilities, but more longer term, the projections are to have 3.45 billion in assets against 270 million within liabilities. So this is really financially very, very strong company. It's very difficult to see figures like these. We see that the company is also making buybacks and that its insider earnings have increased significantly. And as you can see here, the CEO has literally just bought 67 million Swedish krona. That's approximately $7 million that he has bought in shares of his own company, whilst other insiders are also buying quite aggressively. That's another very positive sign that they're seeing some big news coming. When we look at the stock itself, you can see we've talked a little bit about fundamentals. The company is cheap. It's trading at a discount. It has a lot of cash. It has a dominance in the market that it's in. It's traded within a certain range in the past, which is from this price at around 73 up to around 141. So approximately upside from the current prices. If you'd have bought back here, you could have made 100% upside. If you'd have bought at this dip here, again, 83% upside. And now we believe that we're on this level of support. So from a technical basis, we're seeing a significant amount of price support and a reason why after this downturn and quite an aggressive acceleration above this price point, that this could be a very interesting time to get into this stock. I could tell you a lot more about this, but I'm aware that some of you won't have enough knowledge of all the data sets that I would talk about. If you'd like to discuss this in more detail, please reach out to me. I'm more than happy to share the analysis on this stock and other stocks. We do have a much more comprehensive analysis that we have in a PDF document, which we would also be happy to share. I am just sharing my opinion of the market. Whether this is right for you to invest or not, you should always verify this with your investment advisor if you're not qualified to do so. But if it does meet your requirements, if it does meet your criteria and your profile as an investor, this could be a phenomenal asset to get hold of.